For more on this, let's go to Tim Waterer. He's a business and trade analyst. So, Tim, a record high for Nikkei and near all-time highs for KOSPI. Is this all directly linked to the US-Iran deal optimism, or is there other regional or domestic factors at play?
Nice to be with you. Yes, it is primarily linked to hopes that a long-awaited deal may finally come to fruition. And with that, we would expect to see oil prices continue to head south. And that's been dragging bond yields lower as well. That's been keeping markets on edge for the past week. So that combination of lower oil, lower bond yields, that really boosted sentiment across the markets today. And in terms of South Korea and Japan, as you say, they've been on a good run recently, and not surprised to see them doing well on the back of that lower oil, given that both those countries are large net importers of oil, much of which comes from the Middle East. So naturally, we're seeing that lower oil price translate into that record high for the Nikkei, and also a good performance from the KOSPI and other markets. So yeah, a lot of pre-positioning, hoping that deal comes through. But having said that, if there are any delays or bumps in the road, we could see the gains reverse pretty quickly.
And despite the risk on sentiment, we're seeing gold and silver up. Is this a sign of lingering caution, Tim?
There's an element of that, but I would tie gold and silver's move higher again to the lower oil price again. We've seen since the conflict began that higher oil, and then by extension a higher US dollar, that's made life pretty tough for gold and silver from a yield point of view. So lower oil, that should lead to lower bond yields. That helps gold and silver from a yield play. So that's why they're doing a little bit better at the moment. And of course, the US dollar, that has moved lower today on the back of that lower oil price as well. So a combination of positive ingredients there, dynamically speaking, for the precious metals, which gave them a better start for the week.
Now, bearing in mind there's still a lot of uncertainty as to which way this could go, given the lack of trust that exists still on both sides with the US and Iran deal. But if the Strait of Hormuz does reopen, Tim, how quickly could oil supply normalise, and what would be the immediate impact on global inflation and energy stocks?
That is the big question. I suspect that we're talking months at best, not weeks. And that's because we would need to see mine clearing operations in the Strait of Hormuz. And currently there's around 1,500 oil tankers around that region sitting stationary, and they are not fast moving things. So to get the wheels moving once again, I think that will take some time. So I think, that there could be a bit of a tail to this supply risk moving forward, even if we did get a quick reopening to the Strait of Hormuz. So looking at where things stand right now, taking into account expected mine clearing operations and the logistics of moving so many tankers, it could be a while before we see oil prices back to pre-war levels around the $60 mark. So I think we could see a move lower should the Strait of Hormuz open, but normalisation, yes, months, maybe even heading into later in Q3 or Q4 this year.
And given that uncertainty and the fact that since this war began on the 28th of February, the market has bounced here and there and everywhere due to hope of a deal being reached and then that kind of falling back, what could we see and how should investors sort of prepare for a potential falling back and the deal not being reached imminently?
That is the risk. So yes, we are seeing a pretty positive move higher by markets, but not going all guns blazing just as yet, because we've been disappointed in the past. I mean, Trump has made some promises previously which haven't come through to materialize into a meaningful resolution. So yes, there is a little bit of skepticism at the moment. I think that's why we've seen a move lower in oil prices to the tune of around about $5, and not sort of the $10 to $15 move lower, which could happen should we get an actual deal and the Strait of Hormuz remaining open. So yes, a little bit of caution still prevailing for investors, and I think that's natural, given that nuclear issue, that seems to be a real sticking point. So that Trump may buy some time to try and get that issue cleared up by extending the ceasefire, maybe 30 or 60 days. Let's see what happens. But yeah, markets are still not jumping for joy just yet until we see basically a deal being signed.
Yes, let's see what happens. Tim Waterer live there from Sydney for us. Thank you.